Rabbi Yitzchak said, "Let every man divide his money into 3 parts, and invest 1/3 in land, 1/3 in business, and 1/3 let him keep by him in reserve." This is not theory. This is survival architecture. This is the foundation for inflation-proof assets and generational wealth protection. At the end of this teaching, a prayer for wisdom and stewardship awaits you. The Talmud does not suggest you diversify. It commands structure. 1/3 in land means real estate, tangible earth you can walk on, property that cannot be deleted by a server crash or devalued by a central bank meeting. 1/3 in merchandise means business, commerce, the active work of your hands and mind. 1/3 in reserve means liquidity, cash on hand, ready ammunition for the moment opportunity knocks or disaster strikes. This is not hoarding. This is strategic positioning. The Maharsha, a 16th century commentator, explained the financial logic using principles we recognize today. Land is safe because it can never lose all its value, but its return is also low. Commerce has the highest return, but also the highest risk. Finally, some money must be left liquid for unexpected emergencies. The genius is not in chasing yield. The genius is in surviving long enough to compound. You cannot build generational wealth if the first crisis wipes you out. Why does land come first in the formula? Because land endures. Paper currencies melt, stocks vanish. Bonds betray you when inflation rises. But land remains. Even if the value fluctuates, the asset itself cannot be erased. A biblical hint to this recommendation is found in Deuteronomy, chapter 28, verse 8, where God promises to bless the individual in his granary, understood to mean something that is in hand in his business and in the land. The sequence is intentional. Land is the foundation. Cash on hand is not timidity. It is ammunition. When everyone else is forced to sell at the worst moment, you have the dry powder to buy at the point of maximum pessimism. Sir John Templeton, one of the most successful fund managers in history, built his fortune by accommodating anxious, panicky sellers and buying their stocks when fear ruled the market. His average annual return was 14.3% over decades. He opened every meeting of his investment company with a prayer and eschewed greed. He never chased momentum. He found value in places that were scorned. That strategy requires liquid reserves. Without cash in hand, you cannot act when the crowd is wrong. Here is the surgical truth. If 100% of your wealth is in startups or speculative stocks, you are not investing. You are gambling. John Bogle, founder of Vanguard and creator of the index fund, spent his entire career warning investors about the speculation trap. He proved that actively managed funds very rarely outpace the average of the stock market due to fees that eat into returns. He wrote, "Costs are forever." His advice for most investors was simple: invest in stock indices through low-cost index funds, avoid the temptation to chase performance, and stay the course for the long term. But even Bogle's wisdom assumes you have the discipline not to panic sell during a crash. That discipline comes from knowing you have land and cash reserves to fall back on. If this is resonating, if you are beginning to see the architecture beneath the chaos, comment below and tell me where you are watching from. I want to know where in the world this ancient wisdom is reaching. King Solomon, the wealthiest man in ancient history, built his empire on a foundation of wisdom that predates Rabbi Yitzchak by centuries. His wealth was not random. It was the result of alignment with divine economic law. Proverbs chapter 10, verse 22 says, "The blessing of the Lord, it maketh rich, and he addeth no sorrow with it." Solomon taught that God's blessing removes the anxiety and corruption that often accompany wealth accumulation